Broadcast is now starting. All attendees are in listen-only mode.
Hello, ladies and gentlemen, and a very warm welcome to today's webinar, brought to you by Shared Services Link and sponsored by StatementMatching.com. My name is Sarah Fain, and I am the Head of Research at Shared Services Link, and I'm delighted to be joined today by Daniel Kimpton, the Business Manager at StatementMatching.com. You, of course, also have a very important role today in today's webinar, and that is to make sure that you get the most out of this hour. Please use this opportunity to send us any questions you have, and we'll be taking questions in about the last 10 minutes of the webinar. The best way to ask your questions is using the question functionality, usually over on the right-hand side of your screen, putting in the questions to us, and again, we'll take them at the end of the webinar. You will, of course, want a copy of the informative slides today. They will be sent to everybody who's registered for the webinar today, and you can also access them on our website, www.sharespace.digital. So let's take a look at the agenda for today. I'll be opening up with a little bit of introduction and context for today. We also want to know a little bit more about you, so we have a few poll questions to kick off the webinar. We'll then be handing over to Daniel, who's going to explore the key reasons to become more proactive in AP, how to get to the root cause of AP pain points, and importantly, how to become more proactive in AP. He also has some great case study data that can really show the power of getting more proactive and what's holding organizations back. So touching on a bit of context for today and why this topic is so important. Talking to AP professionals, it's really common that they feel that they're always on the back foot and always being reactive. It's problems that may be happening in procurement or with suppliers end up being AP's problems to solve. So we are going to look at some ways that companies are taking the reins and becoming more proactive. And some of the results that people see from becoming more proactive is they're able to increase financial reporting, the reliability of cash flow reporting, paying more suppliers on time, having fewer calls into AP, clearing the GRNI accounts, and improving the relationships with suppliers. So we'll look at ways to make sure that you are able to achieve these. So coming up on your screen now is we just want to learn a little bit more about you and where you are in your AP automation journey at the moment. Is this something, are you looking to improve AP automation in the next year, in the next 2 years? Are you currently looking to automate supplier statement reconciliation? Or would you say that you're happy with your current levels of automation? So you can tick more than one here, and we will be sharing the results. So it's nice to just get everyone participating and to see how you compare with other people on the webinar today. So good to see a good percentage of you voting. We like to get to about 60% plus, and we are up, just achieved that. So we'll be closing the poll in 3, 2, 1 with about 70% of you voting. And the results are coming up on your screen. So again, more than half of you are looking to automate in the next 12 months. Another about a quarter looking to do it in the next year. Because you can tick more than one, these won't add up to 100, but 38% of you are looking to automate supplier statement reconciliation, and a fortunate 12% are very happy with your current levels of automation. So one more poll, and this is more specifically about supplier statement reconciliation. Is it how many statements does your company reconcile per month? Is it 0? Is it between 1 to 19? Between 20 and 49, 50 to 100, or more than 100. Great to see lots of you voting here. Again, we've got over half, and we'd like to get it closer to 70. So we'll be closing the poll in 3, 2, 1. And that's again with almost about 70% of you voting, and the results coming up on your screen now. So again, I think this is reflective of the large organizations that our audience generally reflects, and that 62% of you reconcile more than 100. But looking down here, significant numbers in these lower numbers, 8% are 50 to 100, 12% are 20 to 49, 12% 1 to 19, and 8% of you don't reconcile any. So with that, I would now like to hand over to Daniel Kimpton from StatementMatching.com.
Thanks, Sarah. Good afternoon, everybody. So my name is Daniel Kimpton, and I work for Statement Matching. Have some really interesting stats from the poll questions there, and hopefully I'm going to be hitting on some of those as I go through the presentation, and actually using real data from 10 of our customers' systems, so 10, live data from 10 customers, out of their production systems. And my objective or objectives for the webinar are to make the case for why accounts payable departments should be more proactive. And I've got on the slide, more proactive to ensure their AP ledgers are accurate. But of course, the knock-on effect of that is if your AP ledgers are accurate, it means that you've got all the documents. You're more likely to pay suppliers on time, which means you're more likely to have fewer queries, and everything is more accurate for cash flow forecasting. And there are a lot of knock-on benefits for it. But I think, like Sarah touched on, being proactive is nice in theory, but accounts payable are, stretched at the best of times, and sometimes they just don't have time, to be proactive because they're just reacting all the time. And then my last objective is right at the end of the slides. Is I'm going to explain how to apply the same approach in your organisation and actually do a proof of concept using your data. So we'll start on, what are the key reasons to be proactive in AP? So for a start, we're in accounts payable, so we want to make sure that our supplier liabilities are accurate. So we want to make sure that we've got all of the invoices, we've got all of the credits, all of the amounts are correct, the currencies are correct, because ultimately we want to, pay suppliers on time. We want accurate data for financial reporting. We also want to make sure that we're paying suppliers correctly, with the correct amount. We're not missing any credits because that hits the bottom line. And also, if you get your ledgers, as accurate as possible, and you get to a point where you get a statement from the supplier, and every invoice on that statement is on your ledger, and you've got no open invoices for the vendor on their account, then in theory, if you were to look in your ERP system at the GRNI account, if you've got any goods receipts that have not been invoiced, and they've got a posting date prior to the statement date, then actually you can clear that down and return it to profit. So that's a big driver for customers to be more proactive. And then again, ultimately, if you do all of this, you get less suppliers ringing you up saying, have you got my invoice? When are you going to pay me? Because, you paid them on time. So the controls, let's look at the controls that AP have in place to kind of ensure, because we're not all, using abacuses and handwritten ledgers. We have lots of things in place already. Even small organizations have procure to pay processes, and in theory, if users comply with the process, then things get purchased correctly, users do their goods receipts, the prices are correct, and everything's great in accounts payable. It would all be easy. So you've got procure to pay process compliance, and then we've all got ERP systems. So ERP systems have checks. They have duplicate checks. They won't let you put certain things on the system. You can try and idiot-proof the process so that when business users get a problem, they know that it's a missing receipt or a price problem. So you try and help users to, they've not complied with it in the first place, but you can kind of help them to comply afterwards with things like workflow. Invoice automation, in theory, can reduce manual errors because you're not keying things in. And if you're, doing purchasing, via portals and that kind of thing, in theory, prices should be correct and users should be booking things in with notifications. So we've got all of that in place. And then lastly, a key control which we're focusing on today is if you reconcile your supplier statements and you do it proactively, you're going to identify discrepancies between what your ledger says and what the supplier's ledger says. And actually, if you do that for your top suppliers or as many suppliers as possible, you can identify issues early, and get them resolved. So that's all the theory, but many things can go wrong. So users are generally, users and or suppliers are often a big part of the problem, because they don't follow the process. They don't raise their orders properly. They don't book things in. When the supplier invoices you, there's one line on the order for stuff, and then they send an invoice and there's, 10 line items on there. There's lots of ways that people don't follow the process. ERP duplicate checks, specifically duplicate checks are very, very basic at best. They expect everything to be the same in order to flag up a duplicate. But as we all know, you have multiple vendor accounts for the same vendor. You can get invoice numbers wrong where users are lazy and it's INV1234. They don't bother with the INV. And then you can end up with another user, doing it properly, and you can get lots of duplicates in the system. So ERP duplicate checks are basic at best. And invoice automation, doesn't necessarily mean errors can't happen. And sometimes you've got documents being automated and actually, errors are going through and you've got less visibility of them. Unless you've got the luxury of having continuous improvement teams, which, lots of customers do. But sometimes, you have to, really do some deep analysis to find out, what the real errors are. But again, you're doing that retrospectively, and you're having to be proactive to do it. And of course, users, you can have error messages and lots of checks, but it's easy for users to just, override the warnings and just post things incorrectly anyway. And then consequently, because of all that, typically in AP, when it comes to reconciling statements, you just don't always have the time to get through the volume of statements that you would like to, and you're often doing it, reactively, which is too late because the accounts, because the vendor's account, could be in a mess by that point. So, what should you be more proactive in identifying? So, if I talk to my customers, one of their key things is, have I got all of the invoices and credits? Do I have them in my system, whether they're paid or not, but just do I physically have them? Do I have any unpaid invoices on the vendor's account, which the vendor is not chasing payment for? Because if it's open on the vendor's account, then, why is it there? It could be a misposting, on the wrong vendor account, for example. Other mispostings, I could have debits and credits the wrong way around. We're all used to being on autopilot processing invoices. So up pops a credit and I put it on my ERP system as an invoice. So now I've got a debit and credit the wrong way around. Currencies, it's amazing when you look at invoices around the world, sometimes it's really difficult to actually find where the currency symbol is. And again, some companies are used to processing lots of one currency and they don't get a huge amount of other currency invoices, depending on how the teams are structured. So again, you can put things on with wrong currencies, incorrect amounts, and then you've got your data errors where you've keyed the invoice number, or you've got the OCR captured the invoice number incorrectly, and date format problems. So you can end up with data errors, but of course, they're duplicate risks. And then, the kind of the back end of it is what I touched on before with the GRNI account, or goods receipts not invoiced account. The balances on there can, build up to be, very high value amounts, especially with your big suppliers. But again, you need to keep on top of those because that is all money that you could return to profit. And if I'm going to, kind of summarize it, how do you actually identify these issues in accounts payable, with all the checks and all the processes that you've got in place, that we've discussed already, the only true way to check that your creditor's ledger is accurate is to compare it to the supplier's debtor's ledger. So in other words, you should all be reconciling more supplier statements, and ideally you should be doing it proactively so that you identify the issues and get them resolved before they become bigger problems. But I think reconciling statements manually. I think anyone who started out in accounts payable, when you were an accounts payable junior and you first started, probably one of the first things that you get given to do before you're even allowed to put invoices on the system is you were probably given some statements to manually reconcile, to see how, detailed you paid attention to it. So anyone that's done it as a manual process knows that it's very, very time consuming. You can only really reconcile, a small number of suppliers. Unless you're a glutton for punishment, it can be an unpopular task. Although I know a lot of people where, even though, we're automating the process, they actually do quite miss, going through and like ticking it off line by line, which is a bit strange, but it's true. And also, reconciling statements is the first thing that suffers when AP are busy, because you have to get invoices on the system and pay them on time, whereas reconciling statements is kind of non-critical. And then if you're doing it manually, even if you're doing it in Excel, with VLOOKUP, there's actually no audit trail to log and keep a track of issues and queries. So if I get a statement from a supplier, there's lots of documents that are missing. I want to request those documents from the supplier. And actually, I want to follow up to make sure that the supplier's complied, because just because I've requested a missing credit doesn't mean they're going to follow through and do it the first time of asking. And actually, I want to report on all of this because, if I've got a team of accounts payable people doing statements and some of the users have continuously got the same problems with the same vendors, lots of missing documents or lots of other types of error, actually, if I've got that in a system, I can report on it and I can say, right, well, I've got my top 20 suppliers and, these 3 suppliers here, 20% of their invoices are missing every month. And actually, when I get into showing the data in a second, you're going to see, some of the stats are quite surprising about, the volume of errors that you can actually see on a kind of monthly basis. But we'll get into that in a minute. And then lastly, I kind of with Excel and VLOOKUP, that's all well and good, but it relies on the supplier giving you Excel. And it also means, you need a certain level of proficiency sometimes, with the accounts payable users on Excel, which is not always there. And the moment that you've done it, it is now out of date. So, tomorrow, or whenever, you'd have to basically repeat the process. So, if I look at my customers, when we take them on, what do they try and do to be more proactive? The first thing they do, if they've not got one already, although if they've got one already, they might not be following it, is you should actually have a policy and a set of procedures. So you work out what your coverage is, what suppliers am I going to reconcile on a monthly basis? I'm going to have my basically critical lists, which could be based on volume, value, they're a noisy vendor, they're on short payment terms, you get early payment discounts, whatever your reasons are, you should have a list of suppliers, and these are the must-do ones kind of every month. And then other customers have like another set of suppliers where, like a sort of secondary set where, on a quarterly basis, they'll do the next bucket down, and they'll want to reconcile them, at least once a quarter. And then we've got other customers where, they process every statement that they receive, they reconcile them, every single one, and that can add up to, thousands a month. And also you need, I touched on it on the last slide, you need tools to manage the exceptions, because it's all well and good identifying that you've got something missing or you've got an error on your ERP system. But actually I want to highlight it, and then I want to flag it up, and then I want to follow it up to make sure that it's actually been corrected. And then if I've got the data that gives me insights into who the problem vendors are, or if you've got users, they mark them up as problem vendors, then maybe someone in the continuous improvement team can go and analyze the data further in more detail and then actually go and identify the root cause. And I think a big one on this is you should engage your suppliers, because actually your suppliers on the accounts receivable side have got just as much interest in this process as you do. Because if I'm in AR, as one of your suppliers, I want to know, have you got my invoices, and are you going to pay me on time? And in accounts payable, obviously, you want to make sure that you've got all the invoices so that you can pay them on time, and you want to pay them accurately. So you do, share the same interest. Now, from an automated perspective, obviously, we talked about the problems manually. So if we're going to automate the process, I need to stay in sync with my customers' accounts payable ledgers. So statement matching is a cloud-based application. So when I start with customers, I get all of their data. So I get all of their open items, and I get the last 6 months worth of paid. And then every day, generally overnight, I get a new file from each of my customers, and that contains just the new and changed documents from the previous day. Nobody in finance sees any of this. It's all a background process, but it basically means I have the same data on statement matching as what the customer's AP ledger has. So that's my ERP data. Now, second part of it is I've got to get the suppliers' statements into the system. Now, the suppliers are going to send you, kind of any old format. They're going to send you Excel. You're going to get lots that are PDF, email attachments, and then we still get lots that come through the post, so they're bits of paper. So these all get auto-uploaded. So with the Excel and the PDF, they arrive via email. You would basically continue to receive them from the supplier into your email inboxes, and then you would forward them to an email address that I give you. And then the process of extracting the data from the Excel and PDF is automated, and then the statements are on statement matching within 24 hours. So all you've got to do is forward them. Paper, there's a bit more work. You've got to scan them to the same email address, and again, the same applies. And then what the system does is it automates the reconciliation. It does that when you first upload, or when we first send the statement in. So it does it there and then. And then it also, the nice thing about getting data every day is statements are re-reconciled automatically on a daily basis every time we get new ERP data. So it keeps reworking the statements. And the system allocates an overall status to each statement and a status for each line on the statement. And I'll explain what the statuses are. So, going back to GRNI, so the fully matched ones, this means all of the invoices on the statement are on your ledger, on your ERP system, and it means you've got no open invoices on the vendor's account that are dated before the statement. So there's two things that you would do with these. First of all, you're happy, and you would send a report to the supplier to say, I've reconciled your statement, I've got everything, these are the due dates for payment, and these ones, you might have some that are paid, so there'll be payment references on there. So the idea is to, stop the vendor phoning you up. And secondly, for those suppliers that are fully matched, if you go in and look at their GRNI account, if they've got any goods receipts that have not been invoiced with a posting date prior to the statement date, you can, do a clearing and return it to profit. And then fully matched with data mismatches, these are good because you've got all the documents, but actually you have some data errors. So you might have put the invoice number on incorrectly, the invoice date, the invoice amount. You might have debits and credits the wrong way around. So, these are ones that you want to go and investigate and correct. And then the next two, so unpaid items missing on statement, that means that you've got invoices on the vendor's account that are not on the statement. And these would be unpaid. So in other words, if the vendor's not chasing you for it, it's not on the vendor's statement, you would want to go and investigate it because it could be, posted on the wrong account, or it could be a duplicate. And then last but not least, incomplete matching. This is probably everyone's priority. This is where you've got invoices or credits or both on the statement that are not on your ledger. And then the one at the bottom, complete, that just means that's like a manual status that a user sets against the statement when they finish working on it. So if I'm the manager of an AP department and I want to look at my critical suppliers, at the end of the month, I want to see that I've got a statement that's dated this month, and I want to see all the statuses have been set to complete, which means my users have finished working on it. Now, when you then go in and you want to manage the exceptions, I've mentioned that you can send reports to suppliers. So, if it's fully matched, you want to send a report. If you've got documents missing, you want to send a report to them to say, well, I've got all of these documents and here's the invoice status, but, these ones are missing. So send them to this email address. You can add notes and flags in the system to kind of manage your follow-up process. So, for example, if you add a note in the system to say, I've requested this credit from the supplier. Let's say next month you get a new statement from that supplier, you'll be able to see the notes that you added previously. And you can also report on these as well, because, the flags that you set might be, well, I'm going to mark this up as a problem vendor. I'm sick of getting the same issue every month. And then you can go back and, kind of investigate it further. And then if you focus on, what we find is if you focus on the high volume vendors, actually, if you resolve the root cause issues, they'll trickle down to all of your suppliers, because the ones where it's high volume vendors, obviously they cause you a lot of problems, but then you often find you've got the same problems elsewhere, but it's just not as visible because they're with lower volume suppliers. But if you resolve the root cause, then it actually trickles down and it helps you with improvements. And again, from an accounts payable perspective, you can actually provide proof and visibility for management about where the problems are, and actually demonstrate value and say, right, well, this is what we've done this month, this is what we've reconciled, and it shows that you're being proactive in making sure the ledgers are accurate. So, getting on to the really interesting bit is I took 10 live customers So we looked in their production systems, and I'm going to give you some insights into what we found from reconciling their statements. Now, the customers are anonymized when we're looking at live data, but just to give you an idea about our customer set, these are some that you can fit on a slide, but they're all different types of industry, different types of volume, and they're all over the world. We've got lots of customers that you can go and look at on the website. So the first one is a metals trading company. And I'm going to talk through this slide in a lot of detail, but then the subsequent slides are the same format. So if I talk through this one, kind of slowly, you'll see the other slides are the same, and I kind of won't repeat it. So what we did is we looked at statements processed between January the 1st, 2020, and January the 24th, 2020. So January is typically, you'll know in accounts payable, generally like quite a slow month, but obviously we're doing the webinar in Feb, so it kind of had to be January. And what you see in the first box is we've looked at the number of statements processed. So this customer processed 111 statements, and then on those statements there were 3,267 invoices for a total value of just under 18 million. And then the average number of statement lines, so that would be the number of invoices per statement, is quite low, when you look at it compared to the others. So there was 29, it was the average number of statement lines. So that's kind of the sort of summary level. And then below it, if you look at what we're quantifying, I've looked at the quantity, the total value, and then what the total value is as a percentage of the statement value. So the first one, missing credits, lots of people are interested in this. You can see they've got 70 missing credits, adding up to 95,000, which is a very small, 0.5% of the total statement value for that month. Missing invoices, this is a interesting one for this supplier because I think it's very high. They had 130 missing invoices, adding up to £5 million, and that represents nearly 30% of the statement value for that month was missing. So that's one of my observations below. What I've done is like observations for each one, things that like stare out at me. But 30% of their, on value terms, 30% is high. Invoice, the third one, in/CR mispost. This is where you've got it could be a credit on the statement, but you put it on your system as an invoice, or the other way around. It's a invoice on the statement, you put it on as a credit. So they've got 0% of those. Next, nearly 0% of invoice amount error. So that's where it could be $100 on the statement and it's on your system as $90. So it could be a plus or a minus figure, but again, very small amount. But my other observation on this one, where it says other data errors, this is a mixture of invoice number, invoice date, and invoice currency. And there are 896 invoices, out of the total of 3,267, valued at 10,736,000. So that's 60% of their statement value that month had data errors. And if you look at my observation at the bottom, 889, so all but 7, with a value of £10 million had incorrect invoice numbers. So that tells me that there is they need to be more accurate when they're putting invoices on. So I'm going to talk through the other ones a little bit quicker, but hopefully I've kind of explained clearly what's on these slides. So the next one, this is a hospitality company, and they're processing about 60,000 invoices per annum. Again, you can see, I'm analysing the statements between the 1st of Jan and the 24th. So we've got 284 statements, so it's a lot higher volume than the previous one. About 20,000 invoices were reconciled for a value of 2.3 million. And I'm not going to go through each of the individual boxes on the bottom, but if you look at the data, I think the bits that the bits that stand out are, they've got 189 missing credits, which are worth 54k. So it's small value, But they've got 18 invoices and credits posted the wrong way round, if you look at the third column. And then other data errors, again, it's not 60% like on the previous one, but it's 33%. And this is a mixture of invoice date or invoice number errors. So that's a hospitality. And then what's this one? We've got an NHS trust. So slightly higher volume. They're doing about 150,000 invoices a year. I tried to pick, some smaller customers, and then, we've got some bigger ones coming down the line. But they're processing, 76 statements, quite high value, 14 million pounds reconciled, and on average about 99 lines per statement. And I think it's low in percentage, but significant in value terms. But if you look at, missing credits and missing invoices, add up to, nearly £2 million. Obviously more on the missing invoices side, about 11%. And then the other data errors, it's almost equally split between invoice number and invoice date errors. Again, this is a lot lower than the 60% and the 33% on the previous slide, but you've still got, 430 documents, nearly £1 million worth of invoices where, you've entered something incorrectly. So for me, that the other data errors are duplicate risks, and they are quite high on some of these. I think this is a pretty good one. So this is a buying organisation. They do about 3.5 million invoices per year, and you can see this one. They've got a high volume of statement lines on average. I've got 382 lines per statement, and they've processed 216 statements in the first 3 weeks of Jan. Now, if you look at the percentages in the next one, again, it's low in percentage but significant in value terms. Missing credits and missing invoices, 2.6 million and 3.5 million. So it's big value. The other one that sticks out is it's £500,000 in their favour on invoices and credits posted the wrong way round. So this is where they've received invoices, but they've actually put them on their system as a credit. So they're not likely to get the money, but it's basically the ledger is inaccurate. But the other percentages, are pretty low on that one. Next one we've got is an airline. So they're processing about 150,000 invoices, and there's big value statements on this one. 84 statements, and it's nearly £300 million worth of invoices reconciled, and there's only 27 lines on average, per statement. So the missing invoices figure, again, it's 10%, which is not as high as some of the other ones, but it's £32 million worth of missing invoices, across 700 documents. They've got one, if you look at the invoices and credits, posted the wrong way around, there's a £2.5 million figure there. Now, there is one invoice for 1.25 million that's been posted as a credit. So it's creating a £2.5 million liability. And then the other data errors, again, it's like 4% of the total value, but it's nearly £12 million worth. And I think it's, really interesting when you actually, look at the data behind this, because I think it's, it can point to, needing to go and do some root cause analysis to find out, why. This is a higher volume one. It's a distributor. It's a buy-sell entity. So they're doing 1 million invoices per annum, about 140 statement lines on average, 217 statements. And I think, if you look at the percentages on here, especially for that size of customer, this is probably the best set of stats I've got in the selection. Now, I didn't run this data for like every single customer we've got. I kind of picked, I don't know what, I just sort of picked a sort of bunch that were in different sectors. But I think, these are very low percentages. Other data errors, which is where you've got invoice numbers, dates and currencies, it's like 0.01% of the reconciled invoice total, which is really low compared to the other ones. And then the next one which is a food manufacturer. They're doing about 250,000 invoices a year. You know, a low number of statement lines on average, you know, 18 statement lines. They're doing 360 statements a month. But again, you know, pretty good stats on here, you know, all below 7% on. Actually, I've just noticed I need to update this slide when I send it out, because the bottom one is the same as the previous slide. We'll move on quickly from that one. And then the next one is a retailer. So they're doing 4 million invoices per annum. Thankfully, the table at the bottom is not the same as the previous two, so that's good. 131 million pounds worth of invoices across 116 statements, you know, with 216 lines on average. So it's you know, high volume, high value. And actually, if you look at the error rates, they're very low. The invoice amount error is actually not what it seems either, because 80% of the 155 documents with an invoice amount error were actually only a penny or a 3 pence difference, you know, which most people, that would be a small differences and it would get posted. You're not going to delay any payment because of that type of difference. And there was only 60 missing credits, which was 0.7% of the total statement value, but that's still, you know, nearly £1 million in value that's out there, you know, missing credits. And then I think I've got two more. The next one is a e-commerce company. So there's, you know, online website. So they're doing 140,000 invoices, processed 312 statements last month, which was about 91 million in value. And I think, you know, they've got a very low number of statement lines, only 21 per statement lines. And on the missing credits, you know, it says 263 missing credits, but actually 167 of those were zero value. So, you know, that 1.31% would be, you know, 0 point something percent. And then the other one, the other data errors is very high, 13 million, but, you know, 22 documents had an incorrect currency, you know, for 6 million on that one. And then the next one is a delivery company. So they do about 250,000 invoices a year. And I think in summary for this one, you know, very low error rates all round. Apart from the, you know, the other data errors, is about 10% of their documents have got data errors, you know, adding up to 1 million. But actually, compared to the other ones, you know, that's actually quite low. So it's all of those stats will be sent out on the slides, and I will correct the one that's been repeated, and you can look through them at your leisure. But I think if I was going to summarise, I think the more statements you can reconcile, the more accurate your ledgers are. And if you can do it proactively and get on top of the errors before they become bigger issues, you will pay more suppliers on time. And if you pay more suppliers on time, that's one of your KPIs. So, you know, that will improve your KPIs. And it also means your suppliers should give you fewer queries, because, you know, what are they going to query if you're paying them on time? And if you start, you know, if you're doing it every month, you know, they get comfortable that you're doing it every month, and it helps with, you know, procurement negotiations. You can also keep on top of GR&I balances as well if you're doing this proactively. And ultimately, if you're making sure that you're minimizing duplicates, you know, you're fixing mispostings, you're making sure that you get all of those credits, you know, that will contribute towards your P&L. And this is not difficult to do. It really isn't difficult for customers it takes them longer to get approval than it does to, you know, actually, you know, do the setup and get them up and running. And we actually offer a 4-week proof of concept for customers to actually try this out for themselves, you know, using your data. How you do that? It's really simple. You don't need to involve anyone in IT. Anyone in accounts payable is able to download invoice data into Excel from their ERP system. So, you know, you would basically download all of the open items plus 3 months paid for each supplier, and you can do that for, you know, up to 10 suppliers or more if you wish. But you give me that in Excel, send me some statements. That could be Excel, PDF, or scanned image. And then we will say, right, let's set up a training session the week after. So there's about a week turnaround from our side. And then on that training session, we will go through all of the examples that you've sent us. So we'll actually go and look at the results, and we would say, right, this is what you would do here. This is how you would add notes. This is how you would do the follow-ups. This is what the reporting looks like. So you kind of do, it's like training, but it's, done kind of practically. And then you have 4 weeks to use the system, and we like to have a weekly call with you to see how you're getting on. We're happy to put more data through, and just help you sort of, it provides input for your business case and, gives you sort of due diligence. Anyway, that's enough from me. So I'll hand back over to Sarah for any questions.
That's great. Thank you very much, Daniel, for a great presentation. Lots of interesting stats in there. So again, anyone on the line, if you haven't asked your question yet, the best way to do so is using the question functionality, which is usually over the right-hand side of your screen, and we'll be putting your questions. So the first one through, Daniel, could you explain a little bit more about how this integrates with the ERP, and does it work with several different ERPs, or maybe just like the big ones like SAP?
Yeah, sure. Yeah, no, it works with any ERP application. And we've got many customers who, they're big organizations, so they've grown by acquisition. They've got a shared service center, but they might have SAP, Oracle, JD Edwards. We've got one customer, I think they've got 5 different ERP systems. Also, it's common for customers to have their ERP system and add-on systems, where invoices might go first before they get posted in the ERP. Again, that's something that we've always been able to do. Now, what we do for the ERP system, we basically have a spec that's like an IT spec that says these are the fields, these ones are mandatory, these ones are optional, this is the format that we need the files in. It's like an IT spec that we give customers, and generally, once they get to the front of the queue for IT, because it never happens in 5 minutes, it's generally, it's invoice header and supplier data. So it's not like we're asking for anything too complicated. And yeah, we probably, I think we've even got customers on mainframe and, green screen things. If anyone on the line uses SAP, we do have a slight head start with SAP because my background's SAP, and we have created a report that is a standard report for SAP customers where I just give it to them as a transport. So it means they don't have to get their IT department to develop anything. So yeah, SAP, we've got a head start. I give you it, it's already done. The rest of the ERP systems, it's just a simple spec that you would need to get your IT to sort out.
That's great, thank you. And how long does this typically take to implement?
On our side, it takes us no longer to implement for when customers have really signed up as a customer, beyond the POC stage. It takes no longer for us on our side than it does when we do the POC. So if you give me the data today, I'd be looking to do training next week. Now, the bit that takes the time, and this is completely dependent on the customer side, because it's all about the process that they have to go through to say, I want to do this. They have to get a ticket raised, they have to justify it, et cetera, and eventually their IT department get around to doing it. Now, that could be, it could be days, it could be weeks, it could be months, depending on, demand at the time on the customer side. But once you get IT on the line and they understand what the requirements are, it doesn't physically take them a long time to create these extract reports, but the time it takes is actually getting to that point. So anything from, if it's a smaller company, it can be, 2 or 3 weeks. And I've had bigger companies where it can be, 3, 4, 5 or 6 months. But none of that is actually doing the implementation. It's just going through the whole process to get it approved and done.
That's great, thank you. Questions come in around the pricing model as well. Could you give a bit of insight on that? Is it like a cost per statement, for example, or how is it structured?
Yeah, so the costs are easy. There's kind of two components to the costs. There's a fixed monthly subscription, which is based on the size of customer in terms of their annual transaction volumes. So I did a demo this morning, for example, and that customer processes 200,000 invoices per year. And for that size of customer, their monthly cost would be about £900, and that's a fixed cost that you pay every month. And there's also a variable cost, which is based on the number of statements that you process, and we charge a flat fee of 40 pence per XL. So there could be 1,000 invoices, it would still be 40 pence, or it's a per page charge for paper and PDF of 50p. So the demo I did this morning is they processed 100 statements and they get about 20% in Excel, and they have about 1.5 pages on average, per paper and PDF statements. And that worked out to about £70 worth of statement charges. So that's if they do 100 statements a month. So, that would be what, £970 per month. And there's no other costs. There's no costs per user. It is literally just the monthly subscription, and it's a 30-day rolling contract with no minimum term.
That's
and
great.
If anyone's interested in the costs, I can. We've got like a little calculator which we can plumb your values in, and then it will basically spit out a cost. And I'm happy to share that with anyone as a follow-up.
That's great. I appreciate your transparency on that as well. A question around the data protection. Are there any issues when sending over the statements over to you? Is there anything that statement matching does just to keep data protection safe from the AP side?
Yeah. So on that, we obviously a lot of our customers are. I say a lot. I keep saying a lot of our customers are big. A lot of our customers, process from 60,000 up to 5 million invoices a year. And the bigger the customer, the bigger the InfoSec process you have to go through. So we're finding it more and more now. You have to go through these huge security assessments where they look at all the controls that you've got in place. They look at all your security policies, how you actually secure the application, how the whole thing works. Some customers, we have to give access to a test system so that they can try and break it and hack it. So we have to follow all of those things, and we've never not passed one. So we have all the controls in place from a security perspective. Now, if you think about statement matching, the application itself, the actual data we're holding in there is invoice header information, which is either a date or a number, and I'm holding a bit of information about the supplier. So I know the supplier, the vendor number and the supplier name. So it's not like I'm not holding like personal identifiable information in there. It's really a date or a number or a vendor name. But obviously I am holding details of my customers, their contact details, because we support them. We have CRM and stuff like that. So you have to follow all of these rules. But again, that's something that we generally go through as part of a customer's due diligence.
That's great, thank you. Another quick question has just come in. What about the invoices that are not ready and have a park status?
Yep.
Which is the status in the statement?
Yep. So I would have all of your invoice data, whether it's in a workflow system, so it's not even in the ERP system. If it's in the ERP system, I'm assuming whoever said parked is an SAP user. So I would have parked, held, every single status document in statement matching. So we don't just have open and paid, we have all of the statuses.
That's great. Thank you for that. And then again, any follow-up questions you have, feel free to use the Q&A function here. What would you say are some of the most common data errors? You mentioned some in the statistics, but it could be a variety of things. Which were the ones that were propping up most in that
invoice number?
Invoice number, okay.
Yeah, invoice number, because people are keying invoices in all day. It's easy to make mistakes with your finger. People that are using OCR, it gets I's and ones wrong, 3's and 8's, that kind of thing. Some users might, if you get an invoice and it's IMV 1234 on the supplier statement, or when the supplier sends you the invoice, you might not bother with the IMV. So you find quite high volumes. Invoice number error is definitely the most common one.
That's great, thank you. And you mentioned upfront that invoice automation doesn't always prevent these issues, but have you seen any correlation between some of your, the better stats performers are using invoice automation versus not? Have you seen invoice
Yeah,
automation prevent a lot of these issues?
no, definitely. The customers that have got invoice automation in place, and the ones who work at it, because it is not, it's not right. Everything is not right first time, and just because you think it's right, it's not always right. But the ones who spend time on it, the automated process is better than when it's 100% manual, because humans make more mistakes than machines do. So yes, they are better when you look at their results on statement matching.
That's great. And can you share any insight about maybe how much an organization have saved in the end by using some of this information, even if it's just kind of anecdotal or testimonial about? It'll be different for every company, but have you seen any examples of, okay, we found this and now we've saved this much money?
Yeah, I'd love it if I had those hard stats, but often the way people are justifying statement matching is actually they don't have time to reconcile the volume of statements that they want to reconcile now, and they need a solution to automate the process so that they can meet that requirement. But before, if they weren't reconciling statements before, or if they were doing it manually, they can't count how many missing invoices and missing credits they were on a month-by-month basis. And then in a year's time, is that number lower on statement matching? Therefore, that's my cashable, sort of benefit, if that makes sense. That my customers who have got FTEs doing it, 4, 5, 6 FTEs, it's clear. Again, not many of them cut their FTEs because they do more statements with the same number of FTEs. So it's more about, to be honest, it's about, customers are buying this because it gives them the controls, which they don't have now. And it also gives them visibility, which they don't have now because, they're doing it manually, and it enables them to sort of drive improvements. But it's very difficult to then sort of pin a customer down in a year's time and sort of put a saving in kind of writing. But we're always happy to introduce prospective customers to existing customers, and they can kind of have a conversation about it. But I don't have anything written down.
Okay, that's great. So this is the last question we have at the moment, unless anyone else comes in the next few minutes. Should everything be sent over at once, or can the statements be sent when they are received, i.e. daily, or can you, example, get weekly feedback?
Yeah, the statements just turn up every day. Now we always have a spike sort of at the end of week 1, because that's just how it is. But we get statements through, kind of every day. We put the statements on the system within 24 hours. That's the SLA. But it's up to the customer when they log in to go and look at the exceptions. And some customers will go and manage the exceptions, like do the error corrections, request the missing documents from suppliers, and then that'll be it, job done. They won't look at it again. Whereas other customers will go in and do a first pass, and then they'll do a second pass at the end of the month to make sure that the errors have been corrected, and to make sure suppliers have sent the missing documents in. And then they kind of set it to, this is now complete. And I've probably got other customers who check it, more than twice a month. But that's typical.
Well, that's great. Well, thank you very much. It looks like we've come to the end of the questions, but I'd just like to thank Daniel again for a great presentation, lots of really interesting stats here, and well handled on the Q&A. Thank you everyone else who's tuned in, who's asked some excellent questions. Just thank you for your time and attention today. So just before we go, I just want to draw your attention. We've got a few other really exciting webinars coming up. We've got Bacardi, we have Brooks Brothers, we have L'Oreal, Gordon Food Service, Cargill. So we'd love to see you at some of our future webinars, or at our conference in March. I believe Daniel will be there as well. So we'd love to see you, and we look forward to welcoming you next time. Thank you, everyone, again, and goodbye.